Hello guys, I hope you guys doing well and welcome to today's edition of the London Session Open. Today is September 5th, 2019 and I'm producing this market update at midday London time. As you might know, I'm on holiday and I have therefore not been able to do the market update for you, but I thought it would be a good day to provide you guys with an update on Thursday as I promised to you guys before I left London. Now, I don't have my regular microphone and that's why the sound is a little bit dodgy, but I hope will be good enough for you guys to be able to hear what I'm saying, at least. So what we're going to do here, as we usually do, is just to take a general overview of the market and talk a bit about what's happening. So first things first then, we've got some bad data from the US, in particular ISM non-manufacturing, and we're having a bit of risk appetite. So there's the idea that the US and China are going to meet face-to-face in Washington. However, as I understood it, the market was sort of already knew that there was going to be meetings, so they were going to continue anyway, but people got a bit excited about that, it looks like, and sort of pushing sort of stocks up higher as well. We had the ISM figures from last week, also earlier this week, being bad as well, and USD pretty much bottomed out when that happened here on the 3rd. So on Tuesday we got those bad numbers from the US and the dollar is seeing a bit of weakness. So maybe it's the fact that the dollar is weakening that is giving a bit of help to risk appetite and lifting that upwards. And then as well you got the China Caixin manufacturing PMI, and that could also explain a bit. So we had the indicator moving back up above 50 again for the manufacturing sector, and that's rather good because it sort of tells us that the Chinese economy could potentially be bottoming out. Because it is fair that after sort of after interest rates going down as much, like in the US they were at 3 something, now they're at 1.5, that should boost and make it easier, for people with mortgages and people with using some sort of debt, and it could also maybe encourage a bit of spending. But I don't really think we're in that situation where people will spend much more, but they will, however, definitely save more money, because we need to remember that we have a situation where new tariffs were introduced on September 1st. You have more tariffs coming up on December 15th, I think it was, and that sort of is something that I don't think is really priced in the market yet. And so things are going more and more aggressively, and I don't think there's going to be any quicker solution. I do hope that I'm wrong. By the way it's looking, it's not going to be a quicker solution. So I still think it's going to be, yen strengthening, stock market slower, but if the market does not want to go lower, then we just need to accept that and sort of see if we can do things differently. So in the Euro USD, I never really had a very strong opinion, but in general I think the dollar, with its higher interest rates compared with the European Union, the fact that interest rates in Europe are negative, the fact that they're going to have a new dovish central banker coming in, that also tells me that the euro, and more QE most likely, tells me the euro probably is going to weaken. So I think what could happen now, so obviously we bounced from support from this Andrew's pitchfork, which helped us tremendously by sort of telling us we're probably going to trade lower here in August, and now it looks like it pinpointed the low perfectly. Now I think at least in the short term we might go a little bit higher, and I think we're going to have an episode like this one where the market goes up to the median line, and then it goes rejected, and then it goes up again when it goes down. And I think the same thing can happen here. We can probably go up a bit like that, and then probably lower again. And I think if you're trading this from the short term, I think it could be potentially be interesting to short sell again, maybe 111, maybe a little bit higher, maybe bearish below 111.66. Personally though, I don't really trust this too much, and the best opportunities are not around the median line. The better opportunities are at the upper green line, as you can see. Market got rejected there several times, and that means that we would wait to short sell until we reach something like 112.05. Now exacting times for England. So in the UK, Prime Minister Boris Johnson, as you know, we probably will not get a no-deal Brexit. So as it looks right now, it looks like we will have a situation where it passes the House of Lords, sorry, and we will have that becoming law. And then most likely we'll have some general election. I don't know exactly what's going to happen there, who's going to win or not. I don't unfortunately have a very strong view on that. But we can look a bit at what people think if we would have a second referendum, because I reckon we'll have a new general election. And if that general election causes like Lib Dems and Labour and SNP to gain a majority, then it could be a situation where we have a second referendum. And the other side, it could be maybe Brexit Party and Conservatives gaining a majority with the DUP, and then they would push through with no deal Brexit. But the way it looks like right now, at least, it doesn't look like we're gonna have that. And let me see here, there's some odds. So there's an odds for a second Brexit referendum. So the odds for having a second Brexit referendum is right now predominantly like 65% of bets are for that happening. So it looks like the market thinks we will have that. Not the markets, people betting. They think we're going to have a new election, okay? A new vote. Then who's going to win then? The result of a second referendum, if that would happen in this year, then people think 65% of the votes are going for Remain. So it looks like this could be a defining moment here in the pound, where maybe the pound has hit a major low. It is firmly above the 2016 low, and it could be, and I suspect we will probably have a bit more correction, maybe up to 25, 126, and then from these levels one can potentially start to turn bearish again. But for me, it's a bit confusing, and I need to get grips of. I didn't find any votes here on who could win the next general election. If I had that maybe that could help, but I think I need to check with the locals over there, and in essence, and outside, because I'm obviously I live in London, so the opinion of Londoners is very different to the rest of the country, especially outside. Very similar to, say, Scotland, but very different to sort of just outside of London and the rest of England. So I need to get grips of that, see what's going to happen. But at least the way it looks like right now, it looks like people betting that we will have a new election, sorry, a new referendum, and then the outcome of that referendum would be that the UK is going to remain within the EU. So if that is the case, then again we will probably go back up to 130, 135 or something like that, and then we'll see what happens afterwards. But if the EU remains in the UK, if the UK remains in the EU, probably is a no-brainer that the pound is going to gain. So the idea of shorting at 126, 125 would be on the basis that you think that maybe the Brexit Party or the Tories would remain in power, and then they're going to be able to force through a no-deal Brexit or something similar. That will be the reason for selling up here, with stocks maybe above 127.87. Here's the dollar versus the Japanese yen, and stock markets are up. Crude oil prices are up. Everybody's sort of super happy, very enthusiastic. Yields are even up a bit. And what's interesting here is that if we trade above 107, then it will be game over here. We'll go slightly upwards. It's not going to be a major trend reversal necessarily. It's probably going to go up, maybe 108, and then probably down again, and then maybe revisiting the lows again. So it's not necessarily the best opportunity to go long at all. And for now, I remain very low, 107.05. If we take a look now at crude oil prices, so this is Brent crude. I've been focusing a bit on Brent crude because it has the most amount of momentum. So you have this big descending triangle, lows, and break here, and that should have triggered a downslide. You can see the market move down and then went all the way up, right? And I think here it's really on the edge. You really need to see stock markets gaining. Dollar yen needs to stop gaining. because I think otherwise we're going to go up and we'll take out that trend of funding level, and then that will be the end of this little downtrend. In fact, I think we can probably push this down a bit if you wanted to, maybe like that, to reduce the risk. So this is a tiny risk compared with the potential reward, but again, the reason for this is because it's so close to taking that out. And I think in general, as you know, the market is literally just 1 or 2 tweets away from reversing. It's always like that, and unfortunately it's so headline driven. People got really enthusiastic a few days and then they got really bearish the other day, so it's just very short term, and you know, it really is, it's very difficult to know what's going to happen next. As for gold prices, so a few days ago, so we said we can probably buy here somewhere. Unfortunately, we missed that little entry, and here's at least something that makes sense. So yes, okay, Chinese data improving a bit, but you have here a situation, you know, where US data is not very good, so that keeps gold prices bullish. So that makes sense. As for today, I just increased this buy zone slightly to something like 1532. So bullish from here, pushing upwards. The trend will be bullish as long as you're above 1514. German DAX, you know, that head and shoulders we talked about a few days ago, that triggered, and I said if you can buy here on a dip, then that would also make sense. The breakout occurred, and then the market never really looked back. Because the market is, you know, a bit tricky, I will probably, you know, book 50, if not 65% of the profit here on this one, and I'll see if it goes a little bit higher. Because if you look at something like the S&P 500, it's now very close to these very strong levels, and I think it could easily go up maybe to 3,000, but then we'll see. From up here, people are going to be really interested to short sell. For now, though, the trend remains bullish, and I think if we do have a corrective move, maybe to 29.41, I think people might look to buy here. And I think that's pretty much it. So we covered everything. So you know a bit what's going on in England, and why the pound is going upwards, and why I think it might continue to trade upwards. And then that the future, that depends pretty much what's going to happen if we have a general election. And depending on who wins, we'll have that referendum, and the way it looks right now, at least if we have that referendum, the UK will remain within the EU. And then we talked a bit about the Euro USD and things being a bit choppy in general. And I think if I show you this, the dollar index, it actually is showing you, this is another pitchfork, showing you exactly sort of the mood we're in. And you can see here how this pitchfork done a rather good job, but it's not a perfect one as for the euro. But you can see the market goes really enthusiastic about the dollar, breaks out to a new high, and goes back down tumbling. Then goes back up, has a new breakout, and then goes all the way back down here. But we're still within sort of a bullish trend for the dollar. It's just that it's really a few days of aggressive bullish action, a few days of aggressive bearish action. And the way this looks right now, the dollar is going to continue to weaken. So in other words, dollar yen probably upwards, Aussie dollar upwards, New Zealand dollar upwards, Euro USD upwards, pound dollar upwards. And that also means maybe stock market's up for a few more days. But then down here, I think the market will try to bottom out. Okay, that concludes today's market update. I'll be back in London as always, like as usual, on September 11th. That will be Wednesday next week. Have a great weekend, and be safe when you are trading and navigating the markets. Thank you, and bye-bye.